Dear students, welcome to the fourth video of amalgamation. I think this is the last video. Now we are doing the books of the transferor company. So this is the books of transferor company. Transferor company. So as you do the dissolution in 12 classes, so it is the same like a dissolution. Ultimately the transferor companies go to the liquidated. So in this books we need total 12 entries. Okay, so I'm giving here the entries one by one. So the first entry is transfer assets to realization account. Transfer assets to realization account which are taken by transferee company. Transferee company. Okay. Transfer assets to the realization account which are taken by the transferee company. So the entry is realization account debit to individual assets. Individual assets. Okay. Now the second entry. Second entry, those assets are not taken over by the transferee company. That means assets not taken over by transferee company. So if the assets is not taken over, that means these assets are sold by the transferor company. So if the assets is sold, that means we are getting the amount, that is bank account debit, okay, to respective assets. Suppose the land is not taken over, so it should be sold. Then if you sold the land, the entry is bank account debit to land. Okay, so sometime we have a loss or we may be a profit. Okay, so if we have a loss, then our bank will become lesser than the respective assets, so differences come on debit side. But if the bank is more, that means it's more than the land value, then we have a profit because bank balance is more and our land is less, so there is a common difference. Okay, so any differences come, okay, either debit and credit, it should be adjusted in realization account. That means if come on debit side, we are write realization account debit. If it come on credit side, we are same right what, realization account. Okay, okay, if the same value we are getting, then the bank to realization, but if the less or more value, then we should adjust it in realization account. Okay, now we come to the third entries about the liabilities. That means transfer liabilities to realization account. The same way, the entry is individual liability account debit, individual liability account debit to realization. Okay, now so it's an opposite of the first entry. The first entry is realization account debit to respect individual assets. Now we write individual liability to realization account. The fourth entry, liabilities not taken over, liabilities not taken over by transferee company. Okay, so if the liability is not taken over, we have to pay this liability. The liability is paid, the amount is go now, so we write individual, not write individual, respective liability account debit to bank. Same way, if any differences come between the liability and the paid amount, it should be adjusted in realization account. If come on a debit side difference, suppose the respective liability, that means your creditor. So actually creditor is 5,000, but you have paid only 4,000. So difference is come on, the creditor is debit 5,000, but bank is only 4,000. The difference is come on credit side. So we write realization account like assets. And if you come on debit side, we same write what? Realization account. That means any difference has come between the liability and the paid amount, the difference is adjusted in realization account, either debit or either credit. Okay. Now the fifth entry. The fifth entry is due the consideration. Due purchase consideration. Due purchase consideration. So the entry is transferee company, because this is the book of transferor company. So transferee company account debit to realization. Transferee company account debit to realization. Okay. So this is the entry of amount due of purchase consideration. Obviously we will calculate the purchase consideration amount as the last books also. The next entry is entry number 6, receipt of purchase consideration. Receipt of purchase consideration. So as we see the sum, last sum, the consideration is given here the equity share and the preference share. Same way, right? Share in transferee company account debit, or if we take the debenture in transferee company account debit to transferee company. So that this is the entry for receive the consideration, either in share or either in debenture. Okay. So next entry is number 7, for liquidation expenses. For liquidation expenses. Liquidation expenses paid by transferor company. Transferor company. That means the same books we have mentioned. So the entry is realization account debit to bank. Okay. But remember that if this expense is paid by the transferee company, no entry is required. So this entry is given if it's paid by the transferor company. Okay, if it's paid by the transferee company, in this books no entry need to be given. Okay. Now next we come the next entry, that is entry number 8. So sometime the preference share will have to pay the more amount. That means either the preference shareholder may be given in premium or maybe in discount. If preference share holder get in premium, as well earlier some were getting the 10% premium, they're getting the more. So in this country, in this situation, we write realization account debit to preference share holder. Okay. 9 number now we are writing it's 8A and 8B, either this or this. Okay, 8A or 8B. If it's given in a premium, so if in discount, sometime it may be giving the less value, no? In that the entry will be reverse. The entry is preference share holder account debit to realization. Okay. After that, the 9 number entry, we close the realization account. Closing the realization account is the same as the dissolution. So if we close the realization account, we have profit or it may be a loss. So if we have a profit, so the entry is realization account debit to equity shareholder. Equity shareholder. If it's loss, then entry is equity shareholder to realization account, because they are the owner. Heavy loss goes to the equity shareholder. So if any profit, realization to equity shareholder. If any loss, equity shareholder to realization. Next, number 10th entry, we have to pay the preference shareholder. Okay, so on payment of preference shareholder, on payment of preference shareholder, that means ultimately the preference shareholder, first we have to due the amount in the name of the preference shareholder. So we should cancel the last preference share. So preference share capital account debit to preference share holder. That means at first we cancel the preference share capital and due the amount in the name of the holder, and number B, make the payment. So the entry is preference share holder account debit to, either we may give some cash balance, either we may give equity share, or either we may get new preference share. It may be give any kind, other case maybe according to the question, either it may be a cash, either may be equity share, either may be it's a preference share. Sometimes it may be given some debenture also. That means they are paid some way of mood. It may be a cash, it may be equity share, it may be a preference share, or it may be a debenture. Okay, so this is the entry number 10. Now I have two more entry, 11 and 12. Now the 11 number entry, now the turn of equity shareholder. It is the most important entry, the turn of the equity shareholder. So in this entry, at first we due the amount. On payment to equity share. So the first entry due, number A. We are making its 11 number, that is A and B. It's making the total 12 entries. So first we amount the due. That means we cancel the last equity share. So equity share capital, all reserves to equity share holder. And number B, the payment is equity share holder account debit to equity share of transferee company. Okay, so these entries are required in the books of transferee company. So again I am repeating here the first entry in the books of transfer company. We transfer all the assets to the realization account which are taken over by the transferee company. So in your last sum, ultimately all assets are taken over, but sometimes it may be not taken all the assets. So those assets are taken over, realization account debit to individual assets. If any assets not taken over, it should be sale. So if it's sale, the bank account debit to respective assets. The difference may become in the sale value and the book value. So difference should be adjusted either on debit or either may be credit with a realization account. The second entry is transfer all liabilities to the realization account. The entry is individual liability account debit to realization. Sometimes some liability may not be taken. Okay, but in the last sum all assets and liabilities taken. That's why we no need to these two entries. If not taken, it will be paid. So the entry is respective liability account debit to bank. Sometimes the liabilities and the payment amount may be differ. So that time either come on debit side, we adjust in realization account. If it's come on the credit side, same we write realization account. Then on next entry, we due the purchase consideration. We are already calculated the transferee account debit to realization account. Okay. Then we come to receive the purchase consideration. It may be received in share, it may be received in debenture. So if it's come in a share of transferee company, debenture in transferee company to transferee company. Then we come to the liquidation expenses, which is paid by the transferor company. So realization account debit to bank. But if it stands by the transferee company, no entry is required in the books of transferor company. Now the next entry is, that is preference shareholder maybe get their share either in premium or either in discount. If it's that they are taking in premium, realization account debit to preference shareholder. If it's getting a discount, preference shareholder account debit to realization. Ninth entry, that is closing the realization account. Okay, so we close the realization account. It may be a profit, it may be a loss. If it's profit, realization account to equity shareholder. If it is loss, equity shareholder to realization. Okay, then the next entry is the payment of the preference shareholder. So in that case, preference share, first we have to give some two entries here, one for the due and one for the payment. The first with due, that means you cancel the preference share capital, old one, that means in transfer company preference share is cancelled and the amount due in the name of preference shareholder. Okay, so preference share capital account debit to preference shareholder. Then you make the payment to the preference shareholder account debit to, either it may be a payment by cash, by equity share, by preference share, or by debenture. Okay, the next turn to the equity shareholder. So in the same way, we have two entries, one for the due and one for the payment. The first way due, equity share capital cancel. That means the preference equity share of the transfer company is cancelled. We are taking all reserves to equity shareholder. Make the payment, equity shareholder account debit to equity share of transferee company. So this is the entry of in the books of transfer company, and you should remember the only journal entries come from the side of the transfer company, then no other option is there. So it's as simple as like a dissolution, but in a dissolution we are getting the partnership dissolution, we have the number of partners here, but here dissolution is made from the shareholder, that means the owner side, that is the equity shareholder. Thank you.